All right, bet. Let's cook up right quick. So
Let's get to it.
so you got sent over a proposal today
Pitch
to
deck for
invest
ProntoWash.
in a luxury car wash. They're seeking 50K USD for expansion infrastructure to basically expand to a second location, right? Currently, based on all the numbers to keep it simple, right? They gave us the results, all their current business assets, what their business model is, their main revenue stream, right? The use case of the $50,000 for working capital improvements, second location, marketing and equipment. Their goal is obviously expand with this money. Investment opportunity is two options: loan structure, so 10% return on the money. Got to also like fix like how long that may be for, right? Option two, profit participation. So investor receives 15% of distributed net profits on a recurring basis until cumulative returns reach 1.8 to 2 times the original capital invested, at which point the participation concludes. Okay. And then as well, he gave you like a written statement based on yeah, he basically gave you a written statement.
Everything going
Like
on.
about him, right?
Yeah. So the offer is ambitious on his end, and the business looks like a great business. Did some background research myself. I think there's three main components before any offerings come about or any proceedings come about. First thing is P&L sheets are extremely important within the investment territory. So preparing a pitch deck must simply come with a P&L chart before any capital is to be provided in any sense. Um, yeah, and outside of that, the reason why we need that is to go ahead and verify funds, right? On our end, the offer, it's not bad. I won't go ahead and say he's asking for too much. What I will say is to three times your revenue in 3 years, you don't necessarily have an infrastructure problem, especially at the point that you're consistently bringing in a certain amount per month. You just have to deal with a certain amount of reach, and at that point, I believe that advertising costs need to be expanded upon rather than infrastructure costs, given that they're already at a point where I think they were servicing over 66 or 660 clients a month, um,
Yeah.
while looking to go ahead and build their business long term. Those are great numbers. But what can we do in this instance to go ahead and accelerate your marketing platform or go ahead and um, take advantage of the market that you're currently existing in? Right? Who's the competition around you? How are you able to go ahead and work alongside them to go ahead and um, progress on these numbers? See, the monthly average 7 million comp is around 2 million USD, 3 million CAD. So, given that his post renovation performance skyrocketed almost three times uh, for 2 months out of the 3 months that were posted, I think just within that alone, obviously he got a better sense of. I'm not sure what the structure looked like or the infrastructure looked like prior, but uh, advertising and marketing is going to be his biggest factor in developing those assets. One of the businesses we were speaking about prior, I believe, was Jiffy Lube. Having to go break it down and do more research on it, they looked at the exact same sort of um, opulence, the same lens to expand, where they're taking on capital loans to go ahead and expand on their um, business. And they ended up flopping over, I believe, within the coming years after that. They never hit their targets that they had projected out, being a premier um, auto care service. So to go back into my original statement, P&L charts are extremely important, along with allocation of funds.
Yeah. I know 100%. 100%. You're hitting it around the head because I fed it to my Claude that kind of used to go over like investments. And it broke down the files that he gave us personally, right? So, like you said, 666 searches a month, 6 employees, right? Monthly revenue, as far as that goes, they're asking 50K, right? Two deal structures, right? So converting this over to dollars, right? Because that's what we operate in. So recent monthly revenue, 5,800 USD a month. In total, it's about 70K a year run rate through the current year based on the slide projections, right? Annually. Their stated business assets are around 56K USD, roughly in line with the 50K ask. But again, this is a revenue and asset value, not profit. There's no balance sheet, P&L, or third-party verification behind these numbers. So obviously, you got to check that. And then, like you said, year three projections of 162K USD. So doing like almost a 2-3x, like 2.5x, right, of what they're doing now, right? Which again, I would love to understand how they're doing, where they're allocating funds to, and like again, how this is actually going to occur. Because if this is like, if he can guarantee like that he can continue to scale at this run rate, then yeah, I mean,
Great offer.
investing can become a no-brainer, right? Because then you can pretty much guarantee ROI in a certain time frame, right? But again, this is kind of where we're at as far as like due diligence that has to occur before even going further into this deal, right? Understanding the profit margins and the data here, right? Do a proper audit of the financials, see what taxes are, real like bank statements to see where spend is going and the actual overhead, right? Assets coverage is thin. So total claimed assets 56K. This barely covers the investment ask, and it's unclear if those assets are pledged as collateral or just listed for context. That's also good to know. Single location, single founder, concentration risk. So with no mention of a management team beyond the 6 staff, right? So with that 50K, right, is that going to be funding employees? Is that going to be funding another manager for the new spot, right? Um, of course, this is complexity, right? Cross-border and legal complexity. Can't just drop them off 50K. Have to
Yeah.
understand how that goes. And this 10% per annum loan option, right? Doesn't specify if it's secured, what collateral backs it, or repayment schedule and maturity, and as well the profit share option, right? 1.8 to 2x cap. Respectable target multiple if it pays out, but there's no timeline estimate for hitting it. And distributed net profits depend entirely on numbers you haven't been shown, right? So bottom line on what to ask for before deciding. Profit and loss statements, so not just revenue, bank statements, defining whether COP can go from 7 mil to that 21 mil growth, right? A cap table and ownership structure, what legal protection or collateral backs either offer, and a clear repayment and exit mechanism. I think we lay that out on the table. It could make sense from like a private equity standpoint. Now, I had to pull competitors in the local market. Um, I haven't read this yet, so we can kind of go through it together. But revenue scale versus market leaders. So ProntoWash is a dominant car wash franchise chain in Colombia, Medellin. And at its peak, each of its outlets washed cars at a rate generated 15 to 20 mil per location per month. Covered when the chain had 74 locations nationally. Luxury's current COP 2021 mil month puts it right at the same per location range. The established multi-decade national chain. Strong numbers for two-year-old independent shop, but it also means Luxury isn't outperforming the market leader. It's matched out with one location. Okay. What would it cost to just buy the established brand instead? It's interesting. A Pronto Wash franchise requires total investment of 35K, 5% royalty, and 2% marketing fee on top. It's 15K less.
And what Luxury is asking
Interesting.
for.
Right. But if he is inclined to build out a franchise, that's what I'm more like. That's what I would be inclined to like more so invest in. Like I'd be inclined to like invest into the systems behind scaling a franchise. Cause that's an outplay, you know? Um,
No, I
but doing the math, cop. $30,000. So $8. If he did the average tickets, $8 per wash. And then Australia Medellin standard full service range, 25K to 40K, not the premium tier, actual premium tier. So okay, so that would be good to understand like his services, if there's room for upsells, room for more downsells, like where can he get more cash out of his 660 customers he gets a month, right? So you can even offer more premium experiences here, so we can actually boost targets.
At a rate fee of what? If it's at an $8 fee, $8 rate fee per wash, if you was to bump it by 20%, what does that do to those numbers? That takes him to about 25 million cop a month, approximately
Yeah,
23 to 25 million cop a month. And that's just the start of it. That's without marketing. That's just a shift within his itinerary or within his sales pitch.
yeah, this is good right here. So the premium experience framing in the pitch isn't yet showing up in what customers are actually paying per visit. Luxury is a volume driven at standard pricing, not premium margin driven. That matters for the investment thesis, right? If growth depends on convincing customers to pay premium prices, that's still unproven.
Mhm.
If it depends on more volume and at standard prices, the margins are thinner and harder to scale into the cop 560 mil per year, which is his year three target, right? So we need to understand again how he plans to hit that year three goal, right? Um, Overall, Colombian car wash market's valued at more than 150 mil in USD. It's projected to reach 200 mil by 2029. Steady but not explosive growth. So it's one of those like it's gonna be there. You know, it's not going anywhere, which is always good to know.
Mhm.
Um, Low barrier to entry. This is good. There's a bunch of direct competitors in Medellin. Most offering comparable. Okay. Against the comps. I can build out a quick side-by-side table. All right. But this is good to know for sure. For sure. I'm definitely inclined to actually understand like where he's spending money,
Yeah,
right?
P&L are critical.
What's going out from marketing? Because it looks like this is the car wash page. And he posted in January, 21 weeks ago.
Yeah. So
Looks like he
within
posted in
this,
January.
exactly within his breakdown, the P&L is critical for us to go to make a decision moving forward on his scalability. Are
Oh,
these the
okay.
rates here? Okay, these are the services here. So within his balance sheet, what is he currently paying for? That's also something we need to look into for his current product or whatever he has on shelf. We need to understand what he's paying at bulk for his material. And if we're able to go
Yeah.
ahead and locate that at a cheaper rate and alongside being able to put I don't see a 15 to 20% increase in his sale production being anything out of the ordinary. I think that's something that could very well be done, which is going to create him a significant difference in revenue short term, and it'll lead
Right.
into what he's looking for long term. But I think that's one piece of information that we look at when we go back into what his advertising or sorry, not advertising costs, but his functioning costs are. But yeah, I don't think it's genuinely a bad offer. I think it just needs to be rebalanced. I think there are things that need to go ahead and be placed into a different tier for me to be green on what it is within that market. But and franchising it as well would definitely be something where we need to look into if we're going to make the biggest impact on scaling this business.
Yeah.
Also, I don't think we hit on what's in the package too. Like, what is he offering through it? Is it all individuals, or is he able to go ahead and group his services together? Obviously, the further
Right.
broke it down it becomes messy for a client. You got to look at how he's able to deliver it to a client, right?
Yeah, exactly.
I think that's the one thing that a lot of places do really well. And think about it, when you go to a natural car wash or like a normal car wash, there's only three tiers of things you can get. So you have your like standard wash, you have your like whatever mid-tier wash, and then you have your deluxe, if you want to call it that. Where is that broken down within his functioning
Mm,
ecosystem?
yeah, this is
Is that
saying
another
based
thing?
on it's saying based on the numbers, right? If 660 customers are coming in, his
That's a lot of
monthly,
that's a lot of business. That's amazing.
yeah, it is. It is. He's priced under the market, which is good, right? Because they're averaging 40K to 250K per customer. He's averaging
30
30
to
to
35,000.
35K,
So
right? So,
that's our first mix in terms of where we go look at what needs to be done next. I don't think an investment of $50,000 needs to be put in place for him to go ahead and reach his goals.
yeah, I think you could boost. Yeah, hold on.
Just like that, like just like the Cloud said, we go up 30% simply just off of rebalancing what he's offering. He already has the clientele coming through. And a lot of times when people are not having to look at different things and when they have other things added into the package for maybe what $2 or $3 more within itself, he's taken off. It's a
Yeah,
math.
exactly.
It's a great breakdown. It is a great breakdown.
Okay, fix the upsell, the point of sale.
Yeah,
Right. Highest
exactly.
leverage, zero cost. Yep. So if most are buying the 30K package, right? Example of 25% upgrade to the 60K just from the staff offering it at checkout. That's roughly an extra 5 mil a month with no new customers, no new capital, no new location, right?
So don't run to debt. Please, for whoever's watching this, do not run to debt. You just got to work with
Facts.
what you got. Be smarter with your money.
Yep. Psychology. Reprice the menu psychologically.
Number
Right now,
two,
the Cecilio is the anchor because it's listed first and the cheapest. Moves move special or Berlita to the top. So we're talking about his service list right now, right? So he's got the cheapest one first, right? So you just psychology them. Okay.
those are the three things I
Top
just broke down right there.
the recommended option. Okay. People default to whatever's presented as standard. This is good.
The simple, the single, the mid tier, and the luxury. If you're able to
Yeah.
balance it out to have the service reflect whatever it is that you want, if you're able to take it there and you're able to go ahead and say to yourself, listen, I'm able to go ahead and allow for this price tier to include X, Y, and Z, and I'm able to go ahead and understand exactly what's going into it at this rate, you can come up huge within um, your percentages in terms of profit margin percentages simply just by rebalancing your offer.
Yeah, this is good. This is good. Even the bundle play, right? So
The
like
exact same thing we're
Cecilio,
talking about.
Berlita, right, into a Lavado Completo package price just under the sum of both, right? Bundling raises ticket size while feeling like a deal to the customers, right? Because it didn't break it down in English. I forget what it said it was. But it's
For which
like
one?
a wax and like a wash, right? You bundle it. It looks like it's cheaper for the customer, but it's more money for the business, right?
Exactly.
Uh, prepaid packages and memberships. No one's probably doing that over there, which they do over here, right?
But
Just like you can
even
buy
placing
a
it,
monthly membership.
but even placing it into real time, but like when we talk about placing an offer, right? People don't look at the price; they look at what's being offered. A great
Right.
somebody who understands the value of a dollar looks at what's being offered, not the price of what's being given. That's number one. That's the first thing that needs to go ahead and change.
Yeah, the offer for sure, for sure. Fill idle capacity with existing customer base. Pull whatever client list and contact data they have. Wrote a WhatsApp campaign. Yeah, like marketing, right? I hope he's been like building this customer base, like the 600 people. Hopefully, he has name, numbers, emails. Like you always want to gather data when new customers come in. That way, you always have a customer base to fall on. You can run email marketing, SMS, run promotions, right? That's huge. That's huge. Corporate and fleet accounts, right? Grab two or three nearby dealerships, rental agencies, or rideshare. People rent cars every day in Medellin and they have to clean them, right?
Huge market that's being missed on.
Grab those. Yeah, recurring
Huge
B2B
market.
volume. And then you could put them on the prepaid packages and memberships, right? And those would be huge, just stacking extra cash. Referral incentives. So cop 10 to 15K credit for both referrers and new customers. Cheap self-funding paid out of incremental revenue, not upfront capital, right? So incentivizing people to send business over. This is huge. I think these couple things right here could fucking
I
these
think
can grab it extra
when we
5 to 10 mil.
I think when we started this video, we went just directly into exactly what needed to be done before we did our research on it. And just like we said, proven strategies time and time again come out on top. And these are just little things, especially within this market that, and within this niche, this specific niche, that a lot of people don't take advantage of that are game changers in terms of your margins. So when we break down offers like this, the first thing that we have to look at, like I said, beyond everything is your P&L. The second thing is what's being offered. If we can go ahead and create some sort of intimacy between the two of them, then we're able to go ahead and see exactly what needs to be done long term for you to go ahead and scale what you're doing at at a I'm not going to say scalable pace, that's illiterate, but at a real pace to succeed without having to take on extra capital. You're already making money. You already have the clientele coming to you. I'm sure you have an amazing personality to go ahead and take on these clients. Simply just restructure. Do not go into debt. There's no reason. That's a lot of times. There might be times where people need to go into debt in order to build what they're building. But given where you're at with this, you're like in a business. You're in the best place possible as a business owner. There's no better place for you to be. You taking debt is taking you backwards with what you're trying to do.
Yeah, I completely agree, honestly. Yeah, you gotta understand how to like kind of milk the cow that's in front of you, right? Like,
Think of it, bro.
yeah,
It's like
like you,
everybody, most people look at their product, or let's say again, like we could use the juice box for example, or we can use the glass half full, glass half empty example. If you don't take advantage of all of it, how can you get to a place where you're moving forward with it? So we appreciate you guys for your time today. For everybody that's channeling into Foreign Motion Group, please like, share, subscribe this video. We break down offers like these all the time. God bless
yeah,
you.
and
Appreciate it.
if y'all want to get tapped in on the motion, we invest internationally and we buy into people that we believe in, and as well help people consult on deals like these. So tap in and motion.
Motion. Smooth.
Yeah, I'll give you a call.
All right, bro.